If you were born before 1962, there is a very real chance that Social Security owes you money right now, and not a small amount. We're talking somewhere between a few $1,000s and, in certain cases, well over $20,000 in back payments that the Social Security Administration has either already set aside or that you haven't yet claimed because nobody ever told you it was there. I'm Margaret Wells, and this channel exists to break down exactly these kinds of overlooked rules and payments in plain English, because most of this information lives in SSA documents that are dense, confusing, and not written for real people who just want to know if they're leaving money on the table. If you're new here, I'd encourage you to subscribe right now before we go any further, because I cover something like this every single week. And this particular video is going to walk you through exactly where this money comes from, whether it applies to you, and the specific steps you can take to actually check. Let's get into it. The biggest reason people born before 1962 may be owed money from Social Security right now comes down to one law that passed at the very end of 2024 and changed decades of policy almost overnight. It's called the Social Security Fairness Act, and it did something that advocates had been pushing for since the 1980s. It completely eliminated two long-standing rules called the windfall elimination provision and the government pension offset. You may have heard those referred to as WEP and GPO. And if you spent any part of your working life in a government job that didn't pay into Social Security, those two provisions were almost certainly costing you money every single month. Understanding what they were and why getting rid of them matters so much is the first step to figuring out whether you're one of the people this law was designed to help. Here's what those two provisions actually did, because the names alone don't tell you much. The windfall elimination provision, WEP, reduced the Social Security benefit for people who had a pension from a job that didn't withhold Social Security taxes, but who also had enough Social Security covered work to qualify for a benefit. This affected a lot of teachers, firefighters, police officers, some state and local government workers, and employees of certain federal agencies, basically anyone who worked in a system that ran its own pension instead of contributing to Social Security. For those people, even if they also worked a second job or worked before or after their government career in a Social Security covered job, their Social Security payment could be reduced significantly, sometimes by hundreds of dollars a month. The government pension offset, GPO, hit even harder for some people, and it landed on spouses and surviving spouses specifically. Under GPO, if you received a government pension from a non-covered job, your spousal or survivor Social Security benefit could be reduced by 2/3 of your pension amount. For a lot of widows and widowers who were counting on survivor benefits to help cover their living expenses, that reduction wiped out almost the entire benefit. In some cases, it reduced it to zero. People affected by GPO often describe it as feeling like they were being punished for a career they were proud of because they did everything right, they worked, they contributed to a pension, and then they arrived at retirement age and discovered that the system had quietly been subtracting from what they thought they'd be receiving. Here's a real-world illustration of how much the GPO could take from someone, because the numbers are genuinely striking when you put them side by side. Imagine a woman who spent 30 years as a state government employee and earned a pension of $2,400 a month. Under the government pension offset rule, her spousal Social Security benefit would have been reduced by 2/3 of that pension amount, which is $1,600 a month. If her husband's Social Security benefit entitled her to a spousal amount of $1,400, the GPO would have zeroed that out entirely, because $1,600 exceeds $1,400. That's not a minor haircut. That's a complete elimination of a benefit she was otherwise entitled to, based entirely on the fact that she had also earned a pension through public service. Multiply that over several years of retirement, and you begin to understand why people who were affected by GPO are among those with the largest potential retroactive payments under the Fairness Act. For a widow who had her entire survivor benefit eliminated by GPO for 5 or more years, the amount SSA owes her in back payments can be very large. And if you or someone you know is in that situation, it is worth verifying specifically that the SSA has completed a GPO recalculation for your account, because those cases can be more complex than the standard WEP adjustment. Now, both of those provisions are gone. The Social Security Fairness Act eliminated them entirely, and the effective date was retroactive to January of 2025. That means the Social Security Administration was required to go back and recalculate benefits for everyone who had been affected, and to send out the difference between what people had been receiving and what they should have been receiving under the new calculation. Those retroactive payments have been going out in stages throughout 2025 and into 2026. Some people received a direct deposit that hit their account without much explanation. Others are still waiting because SSA is working through an enormous volume of recalculations, and a significant number of people don't yet realize they were affected at all, because if you had WEP or GPO applied to your benefit, you might not have fully understood how much it was costing you. Now, here is the part I want you to pause on for a moment. The $24,000 figure in this video's title represents what some people on the higher end of the range have received or are owed in total retroactive payments. That number is not a flat amount that applies to everyone. What you're actually owed, if anything, depends on how long you received a reduced benefit, how large the reduction was, and how your individual work and pension history interacts with the new formula. Some people affected by WEP alone are seeing retroactive amounts somewhere in the range of several $1,000s. People who were hit by GPO, especially surviving spouses who had their entire spousal or survivor benefit eliminated, are in some cases receiving retroactive sums that are significantly larger. The SSA is required to send you a notice explaining any recalculation, but those notices are written in bureaucratic language that can be genuinely hard to parse, which is part of why so many people watch videos like this one to figure out what's actually happening with their account. Let me also walk you through something that a lot of people are still confused about, which is how the retroactive payment process from the Fairness Act is actually being handled, because the SSA's communication on this has been, to put it generously, inconsistent. The agency did begin sending letters to people it identified as being affected by the WEP or GPO repeal, and it started processing retroactive payments beginning in early 2025. However, the SSA is working through millions of accounts, and the process has not been instant or uniform. Some people received their retroactive lump sum within the first few months of 2025. Others received a letter explaining that their case was still under review, and a meaningful number of people have reported receiving a payment that was different from what they expected, sometimes higher and sometimes lower, with limited explanation of how the number was calculated. If you received a retroactive payment and you're not sure where the number came from, you have the right to ask SSA for a written explanation of the recalculation. If you believe the number is wrong, you also have the right to file an appeal or a request for reconsideration. That process isn't fast and it isn't always easy, but the amounts involved are significant enough that it's worth pursuing if something doesn't add up. And if you were affected by WEP or GPO and you've heard absolutely nothing from SSA, not a letter, not a payment, not an update in your online account, that's also a reason to contact them directly, because the agency has acknowledged that not every affected account has been processed on the same timeline. The action step here is specific. Go to the Social Security Administration's website, which is ssa.gov, and log into your My Social Security account. If you don't have one set up yet, it takes about 10 minutes to create and verify, and it's the single most useful financial account you can have access to in retirement. Once you're logged in, look at your benefit statement and your payment history. If you worked in a public sector job and previously had WEP or GPO applied to your benefit, you should see either an updated benefit amount, a notice about a pending recalculation, or documentation of a recent retroactive payment. If your benefit amount has changed recently and you don't understand why, or if you believe WEP or GPO should have applied to your situation, but you've heard nothing from SSA, call them directly at 1-800-772-1213 Or better yet, make an appointment at your local Social Security office and bring your pension documentation, because in person appointments are far more productive than phone calls for complex recalculation questions. Drop a comment right now and tell me, had you heard about the Social Security Fairness Act before watching this video? I'm genuinely curious how many people found out from a formal SSA notice versus from somewhere like this, because the gap in awareness around this law has been significant, and I want to know if that's matching what you've experienced. The WEP and GPO repeal is the biggest single source of potential back payments for people born before 1962, but it's not the only reason money could be sitting unclaimed under your name. The second reason is one that affects a much broader group of people, and it has nothing to do with government pensions. It has to do with your Social Security earnings record and whether every year of work you ever did is accurately reflected in the SSA's system. Let me give you a quick picture of why this pathway matters at scale before I get into the mechanics. Imagine two neighbors, both 69 years old, both retired school teachers from the same district who left the classroom around the same time. One of them worked summers and school breaks at a private company for most of her career, meaning she also has about 22 years of Social Security covered wages on her record, in addition to her teacher's pension. The other only ever worked in the school system and has almost no Social Security covered work history outside of that. Under the old rules, both of them faced WEP and GPO penalties that reduced what they could receive. Under the new law, neither of them faces those penalties any longer. But the first neighbor also has an entirely separate issue, which is that her 22 years of private employment created 22 years of potential reporting errors, any one of which could be quietly lowering the benefit she's entitled to. That's the second category of money people leave on the table, and it has nothing to do with government pensions at all. Here's why this matters and why errors are more common than most people realize. Your Social Security benefit is calculated based on your lifetime earnings record, specifically the 35 highest earning years of your working life. Every year that Social Security covered wages were withheld from your paycheck, your employer was supposed to report those earnings to the Social Security Administration, and those reported wages get added to your record. Over a 40 or 45-year working life, the chances of at least one employer making a reporting error, one year's wages being misattributed to a different name or Social Security number, or one period of self-employment income being underreported are real. And for anyone who worked before records went digital, the window for errors is even wider. If even one year's wages are missing from your record or are recorded as significantly lower than they actually were, your benefit could be lower than you're entitled to. And because your benefit is calculated using your 35 highest years, a missing year doesn't necessarily drop to zero, but it could bump out a higher earning year that should have been counted, and that can reduce your monthly payment more than you'd expect. For people born before 1962, this is especially relevant because you have the longest work histories, which means the most years of potential discrepancies, and also the least ability to go back and fix records that have aged out of documentation. Checking your earnings record takes about 5 minutes through your My Social Security account. Once you're logged in, navigate to your earnings record and look at every year from the first year you ever worked. The numbers shown are your reported earnings, not your benefit amount, and they should match, at least roughly, what you actually earned in those years. If you see a 0 for a year when you definitely worked, that's a flag. If you see a number that looks far too low compared to what you remember, that's also worth investigating. Social Security has a process for correcting earnings record errors, and the sooner you do it, the better, because the older the error, the harder documentation becomes. Pay special attention to years when you changed jobs, because a mismatch between when one employer stopped reporting and another started is one of the most common sources of missing earnings. Also, flag any years when you were self-employed, because self-employment earnings are reported through your tax return rather than an employer's W-2. And if a tax filing had an error or was filed late, those earnings may not have been credited properly. While we're on the subject of things people often miss about their own Social Security record, I want to touch on something that specifically affects spouses and surviving spouses of people born before 1962, because this is an area where I hear from a lot of people who genuinely didn't know what they were entitled to. If your spouse worked and paid into Social Security and your own Social Security benefit is lower than half of what your spouse receives, you may be entitled to a spousal benefit that brings you up to that threshold. You don't have to have worked at all to receive a spousal benefit. It's based entirely on your spouse's earnings record, and it applies as long as you've been married for at least 1 year and you're both at least 62. For surviving spouses, the benefit is even more significant. If your spouse has passed away and they had a Social Security benefit, you may be eligible for their full survivor benefit, which can be as high as 100% of what they were receiving, depending on your age at the time you claim it. If you remarried before age 60, your survivor benefit from the previous marriage would generally no longer apply. But if you remarried after 60, you typically still have the option to claim on the deceased spouse's record. This is a rule that surprises a lot of people, and it's genuinely important because survivor benefits can represent thousands of dollars a year that some widows and widowers are simply not claiming because they don't know they're eligible. There's also a timing piece to spousal and survivor benefits that often trips people up, and it's worth explaining clearly. For spousal benefits, you generally need to be at least 62 to claim, but if you claim before your own full retirement age, the spousal amount will be reduced. For survivor benefits, the full benefit is available at your full retirement age, which for most people born before 1962 is 66 or 67. But you can start receiving a reduced survivor benefit as early as age 60 or age 50 if you have a qualifying disability. The fact that you can start survivor benefits at 60 is something a surprising number of recently widowed people don't know, and the SSA isn't going to call you to let you know. That's a gap of potentially several years during which money was available and uncollected. And while Social Security typically doesn't allow you to backdate a survivor benefit application more than 6 months, getting it started as soon as possible is always worth the phone call. Here's a common mistake I want to flag because it costs people real money every year. Some people who are entitled to either a spousal benefit or a survivor benefit assumed that the Social Security Administration would automatically enroll them or would notify them proactively that they qualified. That's not how it works. Social Security benefits in almost all cases require you to apply. The SSA is not going to look at your husband's or wife's record and send you a check without you asking for it. If you haven't actively applied for spousal or survivor benefits and you think you might be eligible based on a spouse's work history, you need to log in to ssa.gov or call and request an appointment and specifically ask about those benefit types. The difference between what you've been receiving and what you could be receiving, going back as far as when you first became eligible, can be substantial. I want to be genuinely honest with you here about something, because this is a channel where I think straight talk matters more than making everything sound simpler than it is. I cannot sit here and promise you that you personally are owed $24,000. I cannot give you a number that applies equally to every single person watching this video, because what you're actually owed, whether from the WEP and GPO repeal, an earnings record correction, unclaimed spousal benefits, or survivor benefits, depends entirely on your individual work history, your pension history, your marital history, and the specific details of your Social Security record. What I can tell you honestly is that all of the pathways I've described in this video are real. They're documented. They're based on laws and SSA policies that exist right now, and that people born before 1962 are, as a group, more likely to have at least one of these situations apply to them than younger workers, simply because they have longer histories, more life transitions, and more years in which something could have been missed or miscalculated. The step I'd ask you to take right now is to log into ssa.gov, pull up your earnings record, look at your current benefit amount, and if anything looks unfamiliar, wrong, or lower than you expected, treat that as a signal worth following up on. A 30-minute call or a single in-person appointment could clarify whether there's a recalculation owed or a benefit type you haven't yet applied for. That's a pretty small investment of time against the possibility that there's money you're entitled to that hasn't found its way to you yet. One more thing worth covering before the recap, and this one is specifically for people who haven't yet claimed Social Security at all. If you were born before 1962 and you're still working, or you delayed claiming your benefit because you were waiting for the right moment, it's worth getting a full benefit estimate from the SSA right now, especially in the wake of the Fairness Act repeal. Because if you were previously told that your benefit would be significantly reduced by WEP, that reduction no longer applies. Some people made the decision to delay claiming or even to not claim at all based on an estimated benefit that was artificially lowered by WEP. If that's your situation, the math on when to claim has changed, and running a fresh estimate through your My Social Security account or through an appointment with SSA is genuinely worth your time before you make any final decisions. The same logic applies to people who started claiming early, perhaps at 62, partly because WEP had made their projected full retirement age benefit look too small to justify waiting. If WEP was reducing your estimated benefit by $400 a month and you thought waiting until 67 wasn't worth it because the end number still looked low, that calculation is different now. You can't go back and unclaim a benefit, but if you haven't started yet, you should absolutely run fresh numbers. And if you're already receiving a WEP adjusted benefit that has now been corrected upward under the Fairness Act, the good news is that the higher monthly payment going forward is now permanent, not a one-time adjustment, and your ongoing benefit reflects the corrected calculation from here on out. Let's go through a quick recap of everything we covered today. The Social Security Fairness Act, signed at the end of 2024, eliminated the windfall elimination provision and the government pension offset, two rules that had been reducing benefits for certain government workers and their spouses for decades. The SSA is now recalculating benefits and sending retroactive back payments to affected individuals, with some people on the higher end of the range receiving payments that climb well above $10,000 or $15,000. If you worked in a non-Social Security covered government job at any point in your career, you should log into ssa.gov and check your benefit history immediately to see if a recalculation has been processed or is pending. Beyond the Fairness Act, your Social Security earnings record may contain errors that are lowering your monthly payment, and checking it takes just a few minutes through your online account. Spouses and surviving spouses may be entitled to benefits they've never applied for because Social Security does not enroll people automatically, it requires you to apply. And if you delayed claiming based on an old estimate that included a WEP reduction, that estimate is now outdated and worth revisiting. If this video gave you something useful, do something useful with it. Send it to someone you know who was born before 1962, especially anyone who worked in education, public safety, or state or local government at any point in their life, because those are the people most likely to have been affected by WEP and GPO and least likely to have received a clear explanation of what just changed and what it means for their money. Drop a comment and tell me what you found when you logged in to check your record, whether you already received a back payment, whether yours is still pending, or whether you hadn't heard about any of this before today. Those comments genuinely help me understand what topics to dig into next, and reading them is one of my favorite parts of making these videos. I'm Margaret Wells. Next time, I'm going to walk through exactly how to read your Social Security statement line by line because most people have never done it carefully. And there are details buried in there that directly affect your monthly payment and that are worth understanding before you make any decision about when or how to claim. Thanks for watching this far, and I'll see you in that one.